Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Round two of earnings. So this is the second busiest week of earnings following this past week's madness. Kind of a quiet start today. Not in the sense that the market's not moving, because still getting some really wild swings here. But quiet more so in the fact that there wasn't really like any like big names this morning. Obviously IBM had like a big splash with like a huge M&A deal, but on the earnings front, nothing real substantial, no major name. But that's going to change tomorrow, and really as this week uh, goes on, I mean it's just going to kind of keep getting busier and busier, culminating with Apple on Thursday night. Uh, Actually, tomorrow morning, everybody's old dog of the Dow, GE, has numbers before the bell. But that stock has just been such an underperformer for so long that, and well, not to mention it got kicked out of the Dow. That doesn't help things either. So it doesn't have the same weight that it used to. I mean, it could be a mover, but generally speaking, it's probably not going to have too big of an impact on a lot of other names. Facebook, though, on the other hand, will. Uh, so Facebook was just absolutely destroyed in July. I'm sure anybody that's been around the market this year is familiar with what happened with Facebook back in July. Uh, they missed on revenues, and they warned of materially slowing growth, and as well as user engagement too. So kind of a bad combination of things there. So it was just such like a surprise, because you can see how the stock was trading into it. I mean, just this incredible run, and 217 to mid 170s. I mean that'll really leave a dent. So not only did the stock get hit pretty hard, but it took down Nasdaq with it. Um, you can see there's a pretty nice move the day of earnings. So it ran into the number, and then it immediately sank right back. These are the Qs. So gave it up. It was down about a 1.5% the next day, the Qs, and then you can see it kind of flushed out lower after that. So you can see. I mean, it's not a stretch to say that Facebook is going to have a material impact on Nasdaq. And I mean, really, like you saw it last week, right? Microsoft beat and rallied, and what happened? Like we were up, you know, 2-3% of that day, and then Amazon and Google had mixed reports, and both got hit. And what happened? We were down, 2% that day. So, I mean, these mega cap tech names are having such an outsized impact on how like this market is moving, that like you just, whether you have a position in these names or not, you need to like be aware of them reporting, because they're really going to influence action so much. So the thing with Facebook is that even though the Nasdaq and Facebook both got hit, actually tech didn't. That wasn't the top in tech, right? So you can see like the Qs kept humming along after that, put in a new high. But I mean, obviously Facebook's been a different story. I mean, minus like the one decent bounce right after, it's just been steady lower lows and lower highs, just in a really like really sharp downtrend. And this is probably the most unusual position that Facebook has been in, going into an earnings report. And what I mean is that expectations are lower. So analysts, I mean, not every analyst is throwing in the towel here, but you have seen targets coming in, with price targets, earnings targets, growth targets, etc. coming in, and like the stock really is showing some serious technical weakness. It's zooming in here. I mean, you can see it's below every near-term moving average, 8 EMA, 20, 50. I mean, 200 and 100 are points away. Uh, so not only does it have basically no moving average support, I mean these could act as as headwinds on the way back up. And they have to get back through it. But it's also below 150, which was the pullback. After the Cambridge Analytica scandal, it pulled back and held 150 perfectly. So like you go back a little bit further, right, and you can see that there's really no major area of support now on Facebook for quite a ways underneath. I mean, that's what happens when a stock has such like a unbelievable trend for so long. It's that you just never really spend enough time at any given point to really establish a long-term level of support. So if you're looking at Facebook, you're seeing like maybe like the 120s, low 120s. It's really like the next obvious area of interest on the chart. So really, like, you're looking at this, and it's a much different setup than where it was. I mean, almost the polar opposite, right? I mean, just running expectations super high. Stock has just been incredible, and now, I mean, a couple of months later, it's like expectations are low, and the stock is just really just falling apart. So I guess, long story short, I mean, what does all this mean for earnings, right? So the thing with last quarter is that it broke like a really impressive long-term trend, not just for like the actual stock, like technically, but also from an earnings perspective. I mean, Facebook had been like a machine. I mean, it was just beat guide, beat guide, beat guide higher. I mean, over and over and over again for years. So when that trend broke, not only did the stock get hit, but now like that earnings trend broke too, right? So like the really consistent beat and guide higher is at least for one quarter taking a pause. So normally, when you get like a trend broken like that, you're looking for the following quarter. So it would be this week. You're looking for a rebound print, so a bounce back print, meaning that you're looking for the stock to or the company to deliver results that are kind of like a more in line with the previous. So they have a slip up, and then it kind of reverts back to the mean, or reverts back to the trend, right? So strictly from an earnings standpoint, you're probably looking for a solid bounce back print here. I mean, that's just how like these tend to like work. It's something that's beat and guided higher for 4 years in a row. When they finally slip up, you're probably looking for like a solid bounce back print like the quarter after. So that's the position that Facebook's in now. But you really cannot ignore technicals here, right? The chart does not look good, and the stock performance has just really been terrible with just steady selling. So it's in a very tough technical spot. Very, 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 very tough. Below support, below all near-term moving averages. I mean, I showed you like the longer-term chart where there's not really much underneath until 120. So, you have earnings saying essentially one thing, technical saying potentially the other. What does that mean, right? Well, that means that it seems like there could be some serious volatility. And looking at the weekly straddle, it's about the weekly straddle is priced in about 12.5 to 13 points. But realistically, it could probably end up moving. It could probably end up moving quite a bit more than that. And I mean, when we look at this, right, like the 50-day hasn't been tested yet. So if the numbers are good, you're probably looking at least for a test of the 50-day. Just because, I mean, like the 20-day, it's hit a few times, but like a test of the 50-day would be a pretty good near-term target, and that would be almost, roughly speaking, about a 50% retracement from like 180s to 140. So you take the half of 180 to 140, and that's about 160, right? And that lines up almost perfectly with the 50-day here. So there'll be about the 50% retracement from the August high to the current low. So if you use the 50-day as a target, then that right there is about a 18 to 19 point move higher, right? So 12 to 13 points is the price in straddle, but if you use the 50 days as a target, that's about 18 to 19 points. And I think that could be a realistic, like, bullish target. Some people are saying like 170s, 180s. I think that's a stretch. I think 160, low 160s, that could be possible. Then on the downside, like I just showed you a couple minutes ago, I mean, it's below all near-term moving averages. It's below 150 support. So you really can't discount another potentially large move lower here. Yes, it's cheap, right? And they're still making a ton of money. But if the numbers really are, they show like another deceleration, and people have to keep talking down their targets, then I mean, they're, especially in this tape when it seems like anything gets punished, like even if they beat, it seems like things get punished. So you really can't discount the fact that there could be another big leg lower. And when you look at the long-term chart, like I said, I mean, there isn't really anything until like the low 120s, and from where it's at right now, 143, I mean, that right there is another like 18 or 20 points. So in either scenario, right, like a beat or a miss, I mean, you could be looking at like an 18 to 20 point move. So that's why a volatility bet in this scenario seems kind of interesting, right? Like they're pricing in 12 to 13 points, but there's visibility either direction for an 18 to 20 point move. Obviously, there's other scenarios. So if it's mixed, that's going to present a problem. So mixed, if it's not a clean beat, if it's not a clean miss, and it's mixed, then there's a chance that the it's not going to be as volatile. I would say though that considering like the overall environment and the recent action, I mean, a mixed report probably won't be rewarded. So you're probably looking at something lower, like some sort of move lower. I mean, it's probably not going to be as severe as like an 18 to 20 points on the 120s, but if stocks that are beating are getting hit, a mixed report is probably not going to be looked at too favorably. But the way you approach it could be like the Twitter bet, right? So Twitter was a longer dated bull position and a shorter dated bear position, meaning that if and it actually, I mean, like the stocks are kind of similar in the sense that they both got hit really hard last quarter. But basically, like the rationale behind a longer dated bull bet and a shorter dated bear bet is that if Facebook does have like a really great quarter and rebounds, there could be a steady recovery back higher as people get back on board, right? So you want to have enough time to let the trade develop, right? So because of like the magnitude of the move lower, the recovery could be pretty large, but it might not be immediate, especially with the market nearing like a correction territory right now. So something longer dated coupled with something shorter dated on the bear side, because if it's another ugly report, I mean, expect like a pretty significant move lower. I mean, like it seems that like things get punished quickly, and any sort of rebound will take a little bit longer to develop. So that's why a volatility bet with a longer dated bull side coupled with like a shorter dated bear side seems like an interesting bet on Facebook going into earnings. So lots to look forward to. I mean, it's this past week and this week coming up are just jam packed with just huge names. So just expect like a ton of action, a ton of headlines, a ton of volume, and a ton of big moves. As always, please reach out, questions, comments, pass them along. Hope you guys have a fantastic day of trading, great night, and I'll talk to you all tomorrow.